Hello everybody, Ignatius Jackson CPA here with a video about S corporations and why you want to be an S Corp. Okay, just like my shirt says, S Corps are cool. Stick around, we'll figure out how to save you some money on your taxes and get you some better financial freedom. Everybody, thanks for tuning in to this video. I just wanted to spend some time with you talking about why S Corps are so cool and why you may or may not want to have an S corporation. Okay, so first and foremost, you don't need to have an S corporation if you're not making a profit in your business. Don't waste money converting to an S corporation, having to file a tax return every year if you're not making any money in your business. Okay, you first want to be profitable in your business, because the only thing the S corporations do is save you money on payroll taxes. That's really it. It doesn't give you any additional write-offs. It doesn't give you any other favorable treatments other than save you on payroll taxes. That's the whole point of the S corporation structure and the whole S corporation strategy. Okay, so if you are making a profit of about $40,000 or more in your business, that's kind of the threshold that we typically use here. $40,000 or more of profit in your business. So that's after your revenue less your expenses, get you down to your profit. If that's you, then you probably should be an S corporation. Okay, now in order to be an S corporation, there's a couple things that you would need to do. You would need to first make sure you have an entity. Okay, you have to have a business entity. That's an LLC or a corporation. Okay, either one is fine. I generally recommend that most businesses start out as LLCs because they have the most flexibility in terms of the tax structure that they're going to be, but you can use either an LLC or a corporation. Okay, now when you do that, you have to file a form called 2553 with the IRS to elect to be treated as an S corporation. That's the step that you have to take that a lot of people miss. Okay, you are not an S corporation unless you file that form 2553 with the IRS. They accept that form and they send you a letter in the mail stating that they are recognizing you as an S corporation. If they have not done that, then you are not an S corporation. I just want you to know and understand that. If you have not received that letter, you are not an S corporation. And I'm dealing with this with a few clients, some of them going back several years, where they thought they were an S corporation. They've been filing as though they're an S corporation. They are not an S corporation after contacting the IRS. So definitely make sure you understand the procedures on how to do this and work with a professional if you want to do it. So why do you want to be an S corporation? To save on payroll taxes. The whole point of saving on payroll taxes is you get to save a portion of 15%. 15.3% is the exact number of what you pay on payroll taxes when you're in business for yourself as a Schedule C. Okay, it's a little bit slightly lower than that just because you get some deductions on your payroll taxes and things of that nature. But let's just use 15.3% as a round figure that you can use. So on every $100,000 of profit, another way to think about this, you might be paying about $15,000 in payroll taxes. Then on top of that, you have to pay income taxes on top of the payroll taxes. So your tax bill could be $25,000, $30,000 on a business that makes $100,000 of profit a year. It just depends on what your other income is. So definitely want to make sure that you're factoring this in and considering this throughout the year. Work with an advisor. It's very important that you do this structure in a timely fashion. So you're supposed to do it, before the end of the year typically, is when you want to make sure you get that done. There is a way to file late elections and things like that, but there's a certain procedure that you have to follow, and if you don't follow that procedure, then you might be SOL. Okay, so we want to make sure that you're working towards that goal. If you are paying too much in taxes and you feel like, oh my gosh, my tax accountant just said I pay this much money in taxes. I just talked to a client actually the other day, and they're in that same situation where they should have been working with someone a little bit sooner. And if they had been working with someone sooner, we would have recommended to do an S corporation. Would have saved them about $7,000 in taxes potentially. And so definitely something really, really advantageous to think about. All right, this is a way you can save thousands and thousands of dollars in taxes. Commonly, one of the most common misunderstood items about taxes is people who file as Schedule Cs when they're making tons of money in their business. Don't do it. Don't make the mistake. Make sure you're talking to a professional. Make sure you get that right advice, and make sure they help you out. Okay, so that's it for today. Just real short and brief. I just wanted to kind of give everyone a little reminder that if you are not an S corporation currently, you should really consider becoming one. There's a lot of advantages to being an S corporation, but the primary objective and advantage is going to be saving you on payroll taxes. And that's the goal that we want to have, is to lower your tax burden so you can invest it into your future and on your way to financial freedom, bridging that generational wealth gap. That's what we're trying to do here. Okay, so stay tuned to our channel for additional videos, and we will talk to you later. Okay, bye.